All right, let's just get right into it, shall we? Today, we've got a really fascinating explainer for you on one of the most volatile, intensely watched assets out there right now, Psyence Biomedical. You might know it by its ticker, PBM, or as ENS Psyence Biomedical Limited. We're going to completely break down the technical roadmap for this stock, basically translating what is a super complex multi-year chart into a clear visual journey. That way, you can see exactly what the market is trying to tell us.
But hey, before we even look at a single line on a chart, I want you to just think about this number for a second. 90%. This right here represents the brutal absolute reality of biomedical stocks. The source material warns us that a single piece of bad news can wipe out 80 to 90% of a stock's value in an absolute flash, literally overnight. So the stakes here are incredibly high, and that extreme volatility is exactly why understanding the strict technical levels we're about to explore is absolutely crucial.
Okay, let's dive into this roadmap. We're going to cover 1. The PBM stock price jump, 2. The floor, which is support at $4.14, 3. The ceiling, breaking $10, 4. Those massive upside targets, and 5. The biomedical news risk.
Starting off with Section 1, the PBM stock price jump, moving higher after a massive correction. So what's actually happening right now, and how on earth did the stock get here? Well, over the last 2 or 3 years, PBM has just been through this brutally painful, massive correction. But recently, we've actually seen a really strong upward leap in price. As the analysis points out, technically speaking, the stock is trying to break free from a prolonged downtrending range. Now, when we connect the dots on the chart, the good news is that PBM has successfully crossed its very first level of resistance, but it's currently testing a second, somewhat more conservative resistance barrier. It's tested it, but hasn't quite broken through just yet. It's kind of like it's knocking on the door, but hasn't actually walked into the room.
All right, Section 2, the floor. Support of $4.14 and defending the downside.
Because, before we even start dreaming about profits, smart traders look at protection. So the crucial point here is understanding your support, which basically acts as your stop loss. By definition, this is a critical price level where a stock's fall is expected to, pause. For PBM, the absolute worst-case technical scenario means we have to draw a firm line in the sand, and the data tells us that exact line is $4.14. As the source analysis explicitly warns, the very first thing you must do is ensure the stock does not drop below this target.
And why is that? Well, it's because of this number right here, $4 flat. If you start seeing the price bleed into the threes, like if it officially loses that $4 status, warning bells should be ringing loud and clear. The analysis indicates that if PBM falls below $4, that massive downside trend it's been suffering through for the past few years, it might just immediately resume all over again. That's the cliff edge we're desperately trying to avoid.
Moving on to Section 3, the ceiling, breaking $10, the mandatory milestone.
So what does PBM actually have to do to prove this recovery is for real? The big word here is resistance. This is a price point that a stock actively struggles to get past. For PBM's recovery to truly gain traction, a breakout above $9.96, or let's just call it a clean $10, is absolutely mandatory. It's not a suggestion, guys, it's a requirement. Surpassing and crucially sustaining a price above $10 is the key that unlocks the entire next phase of recovery.
And this brilliantly illustrates the exact situation PBM is trapped in right now. You've got the floor, do not, under any circumstances, go below $4.14. And you've got the ceiling, you must break and sustain above $10. The stock is currently trading in this tense, super tight holding pattern, right between these two absolute boundaries. Traders are essentially just sitting on their hands, waiting for that definitive breakout to happen.
Which brings us to Section 4, the massive upside targets, charting the recovery.
Okay, let's say that strict $10 ceiling is finally shattered. Where do we go from there? Well, let's look at how this builds sequentially. But remember, these immediate price targets only become active if that $10 breakout actually happens. Step 1, the breakout above 10. If that holds, step 2 is a rapid move towards $36. And if that momentum keeps rolling, step 3 becomes an active target of $85. It's basically a stair-step process of recovery.
But hold on, because the ultimate roadmap goes even further. Beyond that $10 breakout and way past that $85 target lies the ultimate recovery milestone, $400. Now, let's be real. The source makes it incredibly clear. Anything beyond $85 requires yet another major secondary breakout to even become a possibility. But if it does happen, that next phase of recovery pushes the stock all the way toward that staggering $400 mark. Now, you might be wondering, how on earth do we go from a $10 ceiling to a $400 target? I mean, it literally sounds like science fiction, right? But it is purely a reflection of technical reality. The stock crashed immensely over the past couple of years. These target levels are so huge simply because the initial drop was just so severe. The technical spring has basically been coiled incredibly tight.
All right, let's bring it back down to earth. Section 5, the biomedical news risk, the hidden trap.
Before we all get completely blinded by the idea of a $400 target, we really need a reality check. The source material is very strict about warning us of 3 inherent dangers when trading this particular equity. First, you've got fundamental risk. Second, technical risk, which is exactly what we've been mapping out today with our support and resistance levels. But third, and honestly perhaps most dangerously, you have news risk.
News risk is for sure the ultimate wild card here. Like we mentioned at the very beginning of this explainer, biomedical stocks are crazy sensitive to news. A failed clinical trial, some unexpected regulatory pushback, or literally just a negative press release can trigger a rapid, totally unforgiving crash. Any bad news can instantly trigger that 80 to 90% wipeout we discussed earlier. It is an inherent fundamental part of the biomedical sector's DNA. Which leaves us with one final, really critical thought taken directly from the source analysis. Do you know how to deal with this situation? Seriously, when you look at this technical roadmap, the tight trap between a $4 floor and a $10 ceiling, the massive upside targets of $36, $85, and even $400, alongside the ever-present danger of a 90% news-driven crash, are you prepared? It's a highly challenging, high-stakes environment, and one that requires strict discipline and a crystal-clear understanding of the charts. Thanks so much for joining me for this explainer, guys. Stay focused out there and keep a really close eye on those technical levels.